and gentlemen, we have some breaking news that's just coming in, and that's pertaining to TCS's quarterly earnings. These are earnings for the quarter gone by. In fact, we're given to understand that the revenue for the company, it is stood at 63,437 crores versus 64,479 crores. So that's down by 1.6% quarter on quarter. The EBITDA for the company is at 15,514 crores versus 15,601 crores. That's also down by 0.6% quarter on quarter. Let's also take a look at the PAT figure that's come in at 12,760 crores versus 12,000. 224 crores. That's marginally up. That in fact is up by 4.4%. So that's a snapshot of the numbers of TCS, what we're picking up. We'll of course be getting into the details of these numbers and break down these numbers with the help of an analyst who's joining us now. Rahul Jain, the Director of Research at Daulat Capital, is now joining us. Thank you very much, Rahul, for joining us on the broadcast. First things first, what do you make of the number, particularly with respect to the expectations that there were that this is going to be a muted quarter? And how are you really seeing the CC growth for the company, the constant currency growth?
Right. So giving it a first look, of course, this is lower than what we were building. So to that extent, the result look miss. I think there is one data which we are eagerly waiting to understand, and that would make a lot of sense is what is the growth in the international business and how much of the current miss has come because of the India business ramp down, which was expected. So I think that is one important data we have to look into it before we form a meaningful view out of it. And of course, the broader commentary as and when we get it. So, but this number, as a first look, looks like a miss to us.
So, Rahul, you're suggesting that the first set of numbers that are coming out, and of course, we will be getting more details on the company's earnings in the quarter gone by. These seem a miss. But if you look at the PAT figure, well, that's up 4.4% on a quarter-on-quarter basis. Were you anticipating this figure to come in at this, given the fact that there's been, an improvement in terms of the PAT number for the company?
Yeah, I think even at an operating profit level, it's a miss. So anything, if it is coming from is from a non-operating angle. So those kind of variation do happen in a very, very wide currency movement quarter, which and Q1 is one such quarter. So we would not pay so much attention to that number as long as the operating business sentiment is not improving. So that may not change our thought process, even if that is a bit.
All right. So operating, sentiment, that is not improving so far as the company is concerned. And that's understandably so, given what we're seeing happen, in the United States. But if we talk about the margins figure, Rahul, the margins figure is slightly up by 26 basis points on a quarter-on-quarter basis. In fact, the expectations were that it will come at 24.2%. It's coming at 24.5%. How do you really look at this in light of the fact that there were no wage hikes?
Yeah, so one aspect, as you rightly said, the wage hike factor, which is not in the regular cycle this time, and that's the reason it looks like that. But more importantly, that was a known factor. One of the tailwind that would have happened in this quarter on the margin is A, on the currency side, and B, as I said, the mix of the business, wherein if the international business contribute much more than the India business, the underlying profitability is expected to be higher. So the better revenue mix would have also supported the margin tailwind. So it's a good surprise, but once we go to the margin walk in terms of how much of it has come from the mix change and how much of it come from the FX, that would be another interesting data to look into.
Absolutely, that will be interesting to look at. Besides, of course, the overall contributors to the numbers that are coming in, and of course, we'll be hearing from the management as well in a short while from now. But let me also ask you about, when you talk about the margins front and the kind of numbers that I've put out, or the PAT numbers that I've put out, how much of Gen AI adoption has had an impact on these numbers that we're seeing, even though, like you're rightly suggesting, these numbers are slightly amiss.
So, of course, we are yet to get any information from the organization in terms of what are the Gen AI element in the total revenue from TCS or any other player also at this point. And there are mixed commitment in terms of what kind of gains are passed back to the customer and what part of those efficiencies are leverage into the profitability of the organization. So these are very project-specific things. At this point, given the fact that there is a lot of investment going into creating those capacity investment and the right talent pool and training, I would say on a net-net basis, Gen AI would take some time before it would be a profitability contributor. For the near term, I would expect it would be more of an investment and it would take, some of these gains, which would be plowed back in terms of creating capacity, training, and the right talent pool. So I don't think that can contribute very positively in a very, very near-term basis.
All right. So it's not really been you're suggesting that, of course, there are investments that are being made into Gen AI and, of course, the adoption. However, it's not as significant and you don't think that it would have contributed to profitability. But Rahul, do hold on to the show. Let me also get in some more breaking news that's coming in with respect to TCS's numbers and, of course, the company activity. Well, the company has announced a dividend of 11 rupees per equity share. And overall, on the scorecard of numbers, how is ET now looking at these numbers? Well, the revenue is, of course, not as per expectations. It's slightly down. EBIT is in line. EBIT margin numbers, those are in line as well. And PAT definitely is above ET Now's expectations. Just one final question before I let you go, and this is essentially on deal wins. Given the fact that there's been a lot of, instability across the world in terms of, the tariff policy by the United States, and of course, various markets are also not performing as well. How much of these deal wins have contributed to the flat margins that have come in?
I would say that, deal wins have been more tricky nowadays because the constant challenge that we see is that deal do happen, but the ramping up of those deal on their timely schedule has remained a challenge. Company TCS also identified this as a challenge in the previous commentary as well. So that is something which impacts your revenue momentum and indirectly also impacts your profitability. But specific to pricing and the deal structure, we are not seeing any significant advantage or disadvantage at this point. So deal win per se, we are not attributing too much value to the profitability movement. I would rather see conversion of deal pipeline to be an important parameter in the commentary once we hear that.